There we go. Sweet.
I hope it catches the big fart I'm about to rip.
Of course.
Jeez.
It's like only you. It's like fucking redneck.
Look at that badass logo that Matt just put on our sidebar there.
I like it. All right. So, who wants to start? Neil, go. Who wants to start?
Oh,
I mean, I'll ask questions.
Sure.
So I mean, we had that pretty big move today. In the afternoon. I think that's really what we're going to focus on. But I know that you were also in a trade for multiple hours. So chronologically, that's first. So why don't you talk a little bit about that trade? Like what you saw as far as a setup, what kind of made you trigger that entry, and how were you managing that trade?
Sure. Um, so I'll start with in sort of unwinding it this afternoon and after close and before we got on here a little bit. I actually think that my entry on the trade was poor. And I'll show you why. Sort of my system that I'm working on is really four criteria. So four criteria must be hit in order for that trade to be taken.
Do you mind
So,
sharing what those criteria are?
yep. So I can, in the live trading room, actually, to be honest, can I share my screen? Does that work? How do I do this? Let me see. Oh, screen one. Is that the right one? Yeah. All right. Let me know when everyone can see my screen. It should just be ES.
I can see it.
Okay. So my four criteria are all right here. So, and can you see the crosshair? I don't know we were having some trouble with that last time, Neil.
Yeah, I can see that.
Okay. So here we are in this little zone here, and I can highlight that right here. So in the yellow zone, and I'll delete that in a second because it's pretty obnoxious looking. But here we are. We're sort of around noon today, right? And we're pushing up. We get through my little resistance zone here from 25 to 28, and we sort of bounce and we keep holding it, right? And really, would the right trade been to long it here? Probably at some point it would be, but I was biased in my own head. I thought that we looked weak. So I wanted to see what we would do up in this zone here. So I had and this is actually wrong. I changed this earlier. This was supposed to be 4145. So this was a resistance area that I had, and if you look back at my crosshair, it was from back here and then back here. So you can see all the different spots where price sort of reversed in this area. So the four criteria I have are the price needs to, the 10 SMA, which is my yellow line here, the price of the block needs to be fully above for a long or fully below. For a long, that at 10 SMA needs to be sloping up. For a short, that 10 SMA needs to be sloping down. I'm also looking at my stochastic here, and I need to be sort of maxed out, close to maxed out, one way or another, top or bottom. But ideally, starting to roll over, right? Starting to reverse in the opposite direction. Last one is this OBV indicator. It's I can't remember what it stands for, but it's essentially positive negative volume, buying and selling. I want to see for a short this start to roll downwards. For a long, I would want to see a sloping downwards start to roll upwards. So here was where I started this trade. So price gets to this 45 here and it rejects. And then it immediately crosses down hard. This sort of reversal candle I posted before is a pretty good indicator to me, that we got to a price that sellers liked and immediately pushed back down. And if you get multiple reversal candles after that price, it's a pretty good resistance area, right? So now I see the price cross the 10 SMA. I also saw this little dip in the 10 SMA. Now, because I had a little bit of a bias thinking that we were going to go down, I took that as a downslope. What I should have done is waited for confirmation and probably entered this trade somewhere in this area, which would have been hours later, 3 o'clock. So I was sitting in this trade for multiple hours, but the trade never went bad. So then I came back over. Let me go back a little bit here. So where I entered around here, that was my first entry. My first entry was either, I can't remember, 36, 37. I know I entered again at 42. And then I think my last ad was like 44. So I had a pretty decent sized position on at this point. But I knew where my stop was, and that was over this line, because that's where price the last time had given me a nice rejection and pushed down. So I put my stop, I think I was at like 46.50, 46.25, something like that. I knew that we just needed to get over this, and my trade was no good. So now, just looking at this, looking back, should I have taken this trade at 3:05 p.m.? Yep. Would much have changed? Nope. But I didn't. But my trade never went bad, so I stayed in it. So this is where sort of the stochastic started rolling over. We're back under here. You're getting that OBV start to decline. So all criteria is met. Now sort of this is where the managing of the trade gets a little bit different, and Gov brought up a good point, because I did see that rising wedge on multiple different time frames, 15, 30, all had a rising wedge. So that sort of gave me a little bit more conviction that trade was going to go right. And Neil saying, I think it was 4142 was a level. That all these things add into sort of my own conviction, but it's all starts with my own process. So everyone got to the same conclusion that this was a good spot to short, but probably with little bit different ways. So was I unhappy that the price came all the way almost back to my stop and I would have lost, I believe it was, I think by the time my averaging down, I don't know, 8 points-ish on some contracts and on some 2, 3, but it wasn't a great feeling being down, but it's trusting, what's going on. Once I saw at 3 o'clock that we double topped there, I actually added to the position, and then I wrote it all the way down to, I think my last cover was 4104. Then I took a little cute long at 4100. It was on this candle when I saw this reversal candle here. We're getting some nice selling now. But yeah, that's really it. So did I follow my own rules perfectly? No, but I'm sort of working on this system, and now I realize that, I could have had a much less stressful trade if I waited for that 10 SMA to really give itself a nice curl over. Because once you see that 10 SMA curling over, I mean, that price, you're never going to stop out here if I'm waiting for any sort of reversal back over that 10 SMA to stop out. I mean, even here we got close, but we didn't have a candle body close above the 10 SMA, so I still wouldn't have stopped out on that trade. The only reason I actually got out was because it was a major level, and you can see here, 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 it all sort of bounced at that 4,100, and I wasn't going to be greedy. We're getting near close. I'm going to close up and take my money and run at that point.
That's
Hopefully
awesome.
I explained well.
That's awesome.
Yeah, that is great. I love a few things. One is like how you're systematic. I think, and I've said it a few times, there's a setup and then you need a trigger, right? Like, so if I throw out a level, I'm not just going to blindly short the level every single time. There are situations where I find it prudent, but usually I will wait for, some type of trigger. I want to see like a change in pattern, lower time frame, whatnot. So everyone has their own thing, but to have all those pieces, I think, is really critical. I think the other thing too is it's something I've screwed up on many times is my trade doesn't have a shot clock. I'll get out because I think it's supposed to work within a certain amount of time, but that's not really it. The key is to be proven wrong by the market. And like you said, where you're wrong and just kind of let it be. So I think those were two things that stood out to me there.
We just
Hey, guys.
just on another note, we just broke that little bear flag to the downside here and starting to accelerate on ES. Anyways, so again, the other thing is I noticed here this double top. That was another thing that sort of really gave me conviction. So the question I have is like what to use as that trigger, and in this trade setup, that's always sort of the question I have is, do I wait for that candle to close below or above the 10 SMA? Is that my trigger? Is the stochastic my trigger? Is it the reversal candle itself, Because right here is that same sort of nasty reversal candle where price came down here, came down to 41.29, and I'm up on the trade significantly at this point, right? So why am I not? I'm sort of entering here. Remember, why am I not just getting out here? That's sort of the other thing. So there's things I'm looking at in this trade where it's like, oh, I could have done this significantly different with a same or possibly better result.
Anyone have any questions?
Yeah, Dan, I think that is just a normal process that we go through as a trader. This is Gov.
Yeah.
So I love how you walk through that entire thing. Totally love. I don't utilize the short duration, indicators. As we've talked, and I think people have seen that. I have been playing around with a little different thing because I'm, after so many years of trading, I still, especially on the electronic side, leaving the floors, it's like sometimes you don't realize you're in a trend market until you're in the trend market, and you've been trading counter trend, and you're picking up a few bucks, or maybe you're down money, but you don't realize it. So I'm now playing around a few things.
What are you considering a short duration indicator?
A short duration. Oh, that's well. Now I'm playing. So typically, what I do is I start off with a weekly, a daily, a 240, a 60, and a 15 to fine tune key levels in the ES. Things pop up. And then I'll go to the NASDAQ, I'll go to the Russell, do the same thing. And then I hop over and I go look at SPX because everybody's got to wake up. When we go real time, the algos operate off of real time inflection levels, confluence levels, and you have to be aware of them. So if you know the ES SPX spread, for example, you can fine tune certain levels. And Dan, you and I and Braden, we've talked about that a lot. And so that's the first thing I do. And then as things are approaching, so I just posted something in the trading room, larger time. Actually, that's actually a compressed 1 minute. I didn't know how to put it in this room, but I put it in the trading room. As we approach key levels, I will go to a 5 minute, 3 minute, 1 minute. I mean, quickly as we're getting there. So I'm trying to fine tune my entry. But in the chart that I posted, I was looking for the double top at the 41.45 area. And for me, that is an automatic trade. I was short. Because I know from experience, the algos, the universe of chartists are all plugging in their little Schwab and Fidelity accounts. They've all done their homework and they're all shorting that level. To me, that is edge. So I will always and automatically short that level because I know I can get a highly predictable scale of 3 to 5 points and give myself room to let the trade work out. So given today, that's what I did. And then now you saw with the scales, I mean, I had plenty of leverage with the trade. And then right around, let's see, where are we at? It really was right around approaching 2:00 Eastern time. I had walked away and I started playing, look at my chart, and I'd drawn a trend line because I always look for two highly predictable setups, a rising or descending wedge. Those are my money trades. Money. Damn it if Dan doesn't mention in the room, I'm seeing the rising wedge and you guys already saw me, I already posted it a couple of times. I'm drawing my line, connecting the second point and drawing it through, and I'm seeing right at that 41.37 level. And granted, I'm already short from 41.44. I've already traded around, scaled a few times, but I then added to a short, the 41.40. I think it was 41.40. I added to the short. And it just looked like it was ripe. And I looked at the NASDAQ. I looked at the key internals. I mean, where was Goldman? Where some of the techs? And where was the Russell? I mean, the Russell, the crap was rising up. It just, as a former floor trader, everything I was seeing, it just felt heavy. So with the reps I have, I just smashed a bunch more ES and I got more short. And then I was watching on the SPX because when we have these big moves to the upside or the downside, it's really key to pay attention to the SPX options. So people might be looking. So if SPX is trading 41.20, a lot of people could be looking at 41.60. Well, why is that? I mean, there's no merit to that. Because if you look at where the high of the day was or where the gap was, you shouldn't have been looking any higher than 41.40 for calls. So that's number one, because spreaders are going to be selling that spread, selling that product, and they're going to be buying, a lower calls, to create a call spread. That's what they're going to be doing. So it's just about knowing key levels. So consequently, given we have the 0 date expiries, I kept fine tuning where SPX was trading. So we're trading at 4140. I'm watching the calls in 4150. I'm watching the puts in the 4130 contracts. I'm watching all of them. And then finally we started moving around. I was like, then I saw where the wedge, when Dan said that, and as I said, I was looking at it as he's typing it. It was crazy timing. And I fine-tuned on the 4120s. It's like, if this thing freaking cracks, we easily, can be down another 15, 20 handles. So I had the ladder up already, and I just launched into it. So I was already short ES, and I launched into that. And given how the day progressed, once we broke that trend line, which was the ascending wedge, my key thing was when we got under 34, you got to sell more, you got to add to your short. A lot of people, when they're already short, that's definitely a scale level. Well, that's fine. But guess what? You just scaled. But once we go from 41.35 and you go to 41.33, money is already in your way. You have a credit on your statement with your position. Resell your last scale and adjust your basis. So I sell 41.33s and I just scaled 41.35s with the idea that we're going to get down to the next level, 41.30, then 41.25, and who the heck knows? So I noted that I actually bailed on all my ES shorts at the 41.25 level to fund my SPX. And I actually scaled a few SPX with the idea that, okay, everything's paid for. David got paid today. And with the idea of the next level would be right down. And if you look intraday with that on the volume profile, the volume shelf, the way that the futures typically work, underneath that 41.25, which everybody that's been on the ICT and pay attention to that level, that has been a key level for a week. We got underneath that. And if you look at that volume profile on an intraday basis, that is called skip like a rock to 41, 11, 12, 13, 14. And that's how these markets behave. And everything just kind of flipped on a switch. Everything in the market. I mean, everybody had all these sell signals and it just ended up working out. But it's about scaling and managing. But to reverse one thing, not reverse, but to highlight one thing. When I'm looking at a trade, my first question is, and Dan actually mentioned this earlier, is like, I like this trade. I see the potential, but where am I wrong? Where you're wrong defines the level of risk. How many points of risk am I taking to reach my target? And what's going on with the NASDAQ? What's going on with the Russell? What's going on with some of the internals? What are they doing? If you look at some of those individual charts, when you're trying to make a decision like that, you can kind of get the sense that they're getting overbought. And I'm not an RSI guy. I don't have any of that shit. I mean, I'm simply a volume profile guy, and I watch price action at my levels that I'm looking at. And that is it. So the stars aligned, and it was funny as hell. Dan mentioned it as I was drawing the damn line. I was already short. I added to the short, and John, he jumps in with the SPX 41.20 puts. I think at $1.60, and I'm trying to buy him at the same time. And finally, I get filled, and I see his statement of fact of what he did, and so now I'm in there, and then QR got in there. And I would imagine everything I've heard from a bunch of other people got in. And, good on everybody. It was just a terrific setup. But I just love these ascending wedges, descending wedges into areas of confluence. So if you go look at that chart again, look at the double top, and then look at the ascending wedge and the possibility. It's just the possibility. Anyway, that's all I got.
I think that's something that's totally not talked about enough here is the fact that when you're winning a trade, those are the trades you add to. You don't add to the ones to average down like I did today, and I wasn't really averaging down. I just realized that I was in this zone that I wanted to build a larger position in. But
Yeah.
technically that's not something I want to do. I want to add once I know the trade's going with me, right? Not when it's going against me. So I think that's
Exactly.
something
No,
that's,
you know what, Dan, I struggled with that process. And
yep.
that's when I started adjusting where, so let's say I scale at that 41, 35, 50, right? All right, so I had to scale. So, I mean, I have a big credit to my position. But the moment it moved lower, there was a mental obstacle I needed to plow through about who cares? All right, you bought back 41, 35, 50s. You have a better position. So what if you sell 41, 33s? So my theoretical average short from before, it's 2 points less. Good God, I'm short from 41.40 and 41.44 trading around it. It doesn't matter. I just adjust my mind, that basis, and it allows me to think that I'm in a new position with the benefit of leverage, credit. And that is called edge.
Oh, you're dead on.
Yeah, it's a risk reward game, right? And if so first of all, like both of you guys were saying, model your trades around risk. Know where you're going to, how much you're going to risk initially, when you're going to reduce your risk, and how you're going to do it. But, when you're adding to that position, that's where you already have the risk taken care of. You can size up at those points and, they're quote unquote free if you're using the credit from your previous trade, but just be careful and make sure that you're not loading up into a big brick wall. You have to really wait for those big clean moves and that really sweet opportunity to present itself. I think that's really the key is no one to, there's a great saying, no one to go big, no one to go small, or not at all. And, that was the time to go big.
Yeah. Neil, you bring up a good point. I mean, with what I did there, I think that's a thing that probably happens maybe twice a month on average, that I see it and I have a credit and everything starts lining up. And that it's like being back on the floor where you see everything going. It's like I'm already short 500 cars and I slapped, another 500 with the broker behind me. And, now I'm short 1,000. It's like, just, you've seen it, the reps, you have the conviction, and you already have a bit of credit. So that's a bit of knowledge, experience that I have on my side. But I will tell you, it's like, guys, it's like going from the floor to going electronic. It was horrendous for me, man. I took 5 years off. I didn't know what the fuck I was doing. And I went and did some consulting stuff for another buddy. And then when I saw the interest rate markets shifting around, yeah, I mean, the bond market is the leader. It kind of tells you what's going on. And then you have dynamics in the market that tells you as well. And I went back in to recapitalize an account and got back in the trading biz. But it still took me a while. I mean, I keep learning every day. Good God. It's like, the number of things I learned from, the handful of guys in the room, from Dan and John, and the list is endless. It's like, it's the wanting of actionable information. I don't need to see a bazillion charts, but it's like, give me context. So the one thing that I'm trying to do, and I know Dan's trying to do, and several guys are trying to do, I love if I'm identifying areas coming up, to be able to throw it in the room and provide some context. And people, that at least, maybe it stimulates some thinking about, it's like, all right, so what is this guy thinking, short or long? I don't know. It's like, you fucking figure it out. I'm looking at this, and then a little bit more information comes out. Seeing a double top here, I mean, that wasn't something that particularly stood out today. I mean, I didn't mention that, but giving context for levels. And my go-to is like, if I don't get a quick scale, guys, I'm out, or I've reduced size, because clearly that told me my entry wasn't very good, and I will reassess. That is the best feedback you can get in this game. Sorry, I'm a little talky.
No, keep spitting alpha. Go for it.
So, is John online?
I don't see him online.
No, he said he was going to have dinner with his kids, and he was trying to get on later if we're still on. But, that's the reason, and I'm sure a couple of you guys realize, that I did the stupid, Alpha Awards, is so people realize our expectation here is for people to provide fucking alpha. It's the reason we're here. It's the reason we're not in other places.
Yeah, I agree. And I think for people that, if they don't feel like they're contributing, is like, just the occasional asking of questions about certain things, you're contributing by asking questions. I mean, I can be quiet as hell, and Dan's already had 10 trades. Then all of a sudden I'll jump in and I'll have 1 or 2 trades. I'm waiting for larger time frame levels. That's my gig. I don't do the
people need to realize
gig.
When they ask questions, there are other people invariably who have those questions too. And everybody learns from the answers. And we don't have any asshole high yield 6 sitting in here that's going to give some snarky fucking reply. We've got nice people who are going to give a thoughtful reply.
That's exactly it. It's like, you know what? I love this platform because when I throw something out, I mean, I'm trying to be, well, it's like, I mean, you're not going to open your mouth unless you've done a little bit of your homework, right? You throw it out, and there's just an idea, a concept, and then it kind of pans out, and then put a little extra material on the comment that you made, whether it kind of goes into a trade or it goes after a trade. And I've been, you know what, you're typically wrong more than you're right in this business, and that's a pretty proven point. But it's about people being engaged and wanting to, learn more about the business. And I think most of us will throw out that if somebody asks a question, it's like, I mean, we're pretty much saying, go to Investopedia, fucker. I mean, it's like, don't waste my time in the room when it's a pretty it could be a rudimentary concept. If you don't know, that is okay. But look it up before you ask, because if we're in the middle of the room and we're trying to post trades, it's like we're trying to be constructive with, align with the market, pay attention to the market. And if we have too much fodder of the Q&A, people will miss trades. It doesn't mean it wasn't a valid question, but ask the question. But I mean, make sure you do your own homework before you throw stuff out. And then we can do, and I love the fact that you've got the random and the questions and the charting. We have other channels that we can discuss the stuff. So
people tend to forget that there's whether it's Google or Bing or whatever it's going to be in the future, God knows. But it reminds me of my old man who will literally call me to ask a question that he could have answered himself in a tenth of the time by hitting the search in Google.
Yeah. But on my side, it reinforces, you know what, when I'm throwing stuff out, it reinforces, what I think, what I've learned after how many years. I'm getting extra reps, and there's no better way to strengthen by trying to teach others to fish. That gives my confidence, and that's when I go from a 20 to a 50 and a 100 on. That's what I'm saying.
For me, that's the reason, and I agree. The sort of explaining things helps me too, but what it does for me more than anything is its accountability. Because that's always been
Bingo, bingo.
my own personal sort of battle is with accountability. And if I'm sort of sitting here and trading in silence, I'm not accountable. I have a hard time being sort of accountable to myself in trading, because where I go on bad streaks is one, or over trading, one, and two is throwing good money after bad. And if I post the trades I'm taking, and one of the reasons I've actually really slowed down or almost stopped trading options, except for that obvious Tesla. It was obvious to me, the Tesla trade today.
Great trade, by the way. Thank you.
Well, and I can talk about why that trade is, and that trade partially was the news. It was partially experience, just knowing how news gets digested, and especially when sort of my thesis all day was the market's looking for a reason to sell off, right? The whole market is looking for a reason, and we've seen it happen with Apple and Google and Microsoft and Tesla, where news in that name sort of extrapolates to being bad for all of them. And it doesn't matter what it is. It's sort of all of a sudden people have this wake up call where it's like, holy shit, like these stocks have gone a long way. Maybe I should sell. Maybe I shouldn't be in 700 calls. I need to be in 350. I need to cut my position sizing because, something could happen. It's just that sort of market psychology where it's copycat trading, where all of a sudden a big name that's been a big leader like Tesla or Nvidia that's led this bear market charge up, gets a little bit of bad news, that can really turn badly very quickly. And that was sort of, to me, is that a trade that's going to work every time with news like that? No. But that's sort of a slap first and ask questions later type trade. And a lot of times those trades, whether or not that they can fix this with an update, because that's, I think someone said that, they can fix this with an update. Does the market care if they can fix it with an update? No, we have a federal agency saying they're recalling vehicles. Whether tomorrow it comes out as true, Elon says that it's all rainbows, butterflies, whatever, it doesn't matter. It's that quick sentiment change was what the play was. It wasn't anything but. And I think that's where and what I was saying was I haven't been playing options, mostly because of, they're hard. They're really, really hard right now. And I've made some poor trades. There's no doubt about that. And I'm not feeling good with them. So I'm not going to play them for a while. So it's only going to be something you play when you really see a big fish in a small barrel.
Yeah, I don't play options that much myself.
No, I mean,
and I know
they're
a lot,
hard.
But you're always at a disadvantage being a buyer. Always. Yeah. And I think aiming for 10x and all that shit, it's going to pop up, right? There's going to be those amazing opportunities, but it's not 2020 anymore. You know, it's a different game. Look how we've just been kind of chopping in this.
It's not 2022 anymore.
Yeah, and I think people really underestimate, you know, how important it is to know the dynamics of options, know your Greeks. And so you can really pick the right strike, and really understand what it is you're actually buying. Because in a lot of ways, if you don't understand that much about options, you're just blindly buying shit. Because it looks like it could get there. I mean, there's not really much thought behind it a lot of times. So, I mean, there's some people that are great options traders that do it right, and I mean, look at John, for example. He's able to pull some stuff. I've never seen it, what he can do.
Dude, he is Carl Icahn. That's the thing.
He's an absolute animal.
He's literally the guy.
He's a complete beast. I mean, we get to a level and he still says he has a 10 lot, and I'm selling my last ones at 16, and he sells 6 on 10 of them.
Part of it too is with options, especially real short dated options. You have to literally just care so little about the risk, and size to care so little about the risk that's the only way you can hold things like that, like he does. He trades with, and this is, it's not really the right word, but it sort of is. It's sort of that reckless sort of way, because it's not reckless. It's very calculated. But the way that he
it's an expect zero. It's an expect zero type of trade.
But his
it is
what's amazing.
It's about You're like putting on the asymmetry. Go ahead, Neil.
No, go ahead, Scoop.
No, I was just saying it's one of those bets where you're just looking for the asymmetry. You're not looking for like a few points here or there. It's like,
correct.
You're looking for that long volatility, asymmetric right tail that you can capture. And if he loses it, it's fine, because that's not the point of the trade. If you take this kind of trades and you're just looking for some scalps, I mean, sure, it'll work, right? But in the long run, if you trade it that way, you will lose money. You have to kind of do it asymmetrically, like John is so good at doing. I can't do it personally.
Oh, I mean, he's really gifted at that. It's unbelievable.
Yeah,
I think it's picking the spots
and the strikes.
And the strikes, and that's sort of, I was looking back on it, Gov, at sort of, did we pick the right strike on Tesla? And actually, I maybe it didn't. I was not expecting it to go to 200 at close, to be completely honest. I did not get into that trade saying, you know what, this is going to go from 3 to 15 here. Nope, it wasn't my thought. I thought it could go to like 210, maybe 209, but if I took the 210s, yeah, I would have made more money. But I looked at it, my instant decision why that 215 was the strike was, I'm not even a 1 DTE now. I'm like a 0.5 DTE. Because what was that, at 2 o'clock or 1:30 maybe? So I'm looking at it as, I need to be close to the money here, because otherwise, I want, if I'm going to be holding an option overnight that's going to be 0 DTE the next day, I want to be in the money, because that's how I can assure that I'm not going to lose as much, and lose as much to the Greeks.
Yeah. I simplify it like this. I look at the range of where it is today, where it's been, where the potential is, and then I cap out the calls, and then I cap out the puts. And then I look at where we're trading. And if we move to the upside or the downside, it's like, what is the strike in between that range? Automatically, I eliminate everything beyond and below. And whatever the price is whatever the price is. And Dan, I was looking at those 15s because I was, and then you mentioned that you had them, and you saw how quickly I followed. So clearly you realize, I mean, I was watching the same damn thing. You called it out, and the 215s were the ones that made the most sense, because the chance to get to a level with the price velocity and the premium, given experience, I thought was going to be really strong with more the 215s than something lower. A lot of people get caught up of like buying the cheaper option, and it's like, and they completely miss it. So I'm going to throw out another case in point. So I just threw out the SPX 500 chart in our training room because I don't know how to put it in this room. So if you guys want to like glance at that. And so we're back to equities, back to the indexes. Look at that line I drew at 41.35.71 was pre-drawn before the double top. That was, all of us pretty much the same thing. It's okay. I'm just like bringing a focus here. Right there, off of looking at that, a double top, and given how everything else was looking, calls to the upside. Anything above 41.30 was a bad move. If you thought higher, if you truly thought higher, because my trade would have been, if I thought higher, my trade would have been, I would have been selling the 41.60s and buying the 41.30s, something like that. I would have put a call spread on. That's what I'd be looking at.
You guys need to go out.
What's that?
Here.
So if you look at that SPX chart, I'm seeing the 41.35s. We now have, that the trend line of the rising wedge, and there's going to be a break at 41.28. And I just looked at the level below the 41.21 level. That just told me 41.20s were the strike. So if that was going to be setting up, I already had that in the grid. And that's how I narrowed it down. So then it was a matter of like, whatever the price was the price. It's like, I'm buying.
Yeah, such an important point.
I'm sorry, was my speaker off? I'm sorry.
No, you were on the whole time.
No, we heard you. No one said anything though.
But yeah, people go too far out of the money. And then you really need that exponential, asymmetric move, or you're screwed. You
are. You have to be, when people are. I'm sorry, Neil. It's like when people are, because I've got a couple of friends of mine. It's like constantly buying strikes that are higher than the high of the day. And then on the low side, it's like they're cheap. Guys, wake up. They're cheap for a reason, to fund the Ferraris. That's why they're cheap. It's like, I'm a former market maker for the Ford. It's like, I would trade these different spreads, not with this, but I traded interest rate spreads. And I would collar around key price levels in spreads between the 2 and 5 year part of the curve. And there's a reason why I have those spreads on, because, they're based on second and third deviations. And I just knew a protracted move one way or another. So that's kind of where my thinking comes from. And now I'm an equity guy, and I see the double top. It's like, who the hell's buying a 41.40 call? So Wisco, you had a message to me. The reason I was not looking to the upside, and I think, as you've clearly heard, we had a double top setting up. That is a high odds short. Playing a breakout on double tops, double bottoms, I'll take your money all day long. It's like being a pool table in the greatest bar in Hollywood. So that's my answer to that. It's like that. It's a low odds trade. So we want to allocate our capital toward higher odds trades. And if we don't get a quick scale, we're out.
Good.
I think that's an important point, because, I think that's an easy temptation to fall in, is, well, we rejected the price once, we came down, and look, we're pushing right back up to it. It means it's an easy trap because it's like, oh, well, in your mind, you're saying, oh, there's buyers here, right?
Yep.
It's maybe it's a trade to take if you break.
Stock.
Yeah, and maybe it's a trade to take if you break that you don't double top and you break out. Maybe you play that breakout, but you can't play sort of to expect a level to break, I guess is the way to look at it. Is a level until it's not. And you need to play expecting the level that's held to hold.
Exactly. And that's
where
the
odds and get in on the retest of that level.
Say that again?
I said if it's going to break that level,
mm-hmm.
Let it go through, and then when it comes and it retests,
then
look at it.
Because then you're close to your stop too. If it does a false breakout or breakdown, and you get in on that retest of that breakout or breakdown, you're real close to your stop, and you can be like, "Yep, tricked me, got me," but your loss of capital is very, very small, and you're still in a spot where you can play that false breakdown or false break up to the other side.
That's exactly right. And Dan, you know what? So to prove that point, on the SPX, the high of that candle was 41.36.24. The market now comes back how many hours later, and it has a high of 41.36.54. So the way double tops and double bottoms work, the odds are so high, you can have a 2-point stop on that sort of thing. And when you do that enough times, ladies and gentlemen, you will find yourself going from 5, 10, 20 to 50 contracts. Whether you're in micros or the big guys, it doesn't matter because you will have enough confidence at those levels. And if it's the one time that all of a sudden news comes out, you had to stop. It cost you some money, but I'm telling you, 80% of the time, you know what? All right, I'm not going to use percentages. That's stupid. There's a high probability you will make more money than you would have lost on that one outlier. And chances are you would have been forewarned. Those are high odds trades, and that's how we make our money to stay in this business. Sound like a preacher. The fuck?
Preach on.
Okay.
Yeah, guys. There's also like this whole, there's two very important things that happened today while we were going up. One was Tesla was going down, right? Tesla started going down because of the news, which Aaron nailed. And at the end of the day, what happened was Apple started going. So you had two of your leaders who were propping up the market the entire day, finally failing, and then you had Bullard on at the same time. That's a gigantic confluence of things happening once. So
that's when I came in.
Great point.
They had to start selling futures as a hedge.
Yeah.
Great point. I was lucky to follow Dan into the Tesla.
You got to keep your eyes on, what other really important or what stocks, at least in my mind, prop up the market.
And I think that, Apple and just because I've said it before or said it earlier today, so I'm going to say that it's true, but I think Tesla started selling, and because of the news, I honestly believe that the marketplace follow the leader, and because Tesla started selling, the other names that have been so strong and started and have been running, people start to get a little jittery in those things, and that's what sort of can start this ball rolling in one way or another.
Yeah, you had Tesla selling.
I think the one thing that Scoob was talking about, Scoob, I'm assuming that was you.
Yeah,
it's just like when the market's at highs or lows, you got to look at who are the leaders and the losers. I mean, out of the key stocks, you got to have a list, market watch. And if you're seeing Goldman, it's like if you're thinking we're going to go down lower and Goldman's already down 8 on the day, that is one of the leading financial stocks. Why wouldn't you pull that up and see how it's trending? It's like then that leads you to looking at maybe, a couple of techs, and you look at a couple of those stocks, and that's where you get your clues, right? About, how, where's the conviction level on my short? Or like, you know what? This thing's coming back and we're going to go to unched on the day. I mean, crazy things like that, but you just have to you got to look at the leaders. So I'm totally with you, Scoop. It's like, that's a key thing.
I mean, I'll tell you 3 technical things that happened. It was Tesla, right? And then Apple, and then we had Bullard. And then if you looked at the market internals after that huge 30,000 contract sell came in, and I mean, we bounced after that humongous sell. We bounced a good 6-7 points.
Was 30,000 in what? I'm sorry, I must have missed that.
Yes.
30,000?
In 1 minute, yeah.
Oh, in 1 minute.
I looked at them and I was like, what the fuck is going on?
It was probably the hedge for that icon trade.
Oh,
sure.
Yeah.
I mean, it was just insane, right? So, like, obviously, and I mentioned...
They're going to sell futures against it, and they're going to do it right fucking now.
Right.
Maybe. I mean, there was also, like, the headline at the same time, so it's possible to trade going on at the same time, and then people freaking out about 50 basis points of March culminated in this gigantic sell. But my point basically was you had this anomaly happen. Like, guys, it's not normal to sell 35,000 ES contracts in one 1 minute candle. That's stuff you only typically see on market on close, and so you should, like, if you weren't already in, if you didn't already follow JD, right? That happens. It's a huge drawdown. We go down like 10 points, 15 points. Market bounces 5 points. You can get back in on that bounce, because if you looked at the market internal, so you have Tesla going down, Apple going down, this anomalous sell happened, right? Bullard speaking. You have market internals down ticking, humongously down ticking. Those are all humongous confluence signs. You can put on puts, you can put on risk there, and you shouldn't. In my opinion, I know a lot of you guys like to limit in and stuff, but in my opinion, in these type of environments, you kind of have to be aggressive.
Slam
it's
it.
Okay. Yeah, just got to slam it. You really got to like mark it in, and you have to realize like it's okay if you go through a little bit of drawdown, because the trade is not you going through drawdown. The trade is you're expecting a gigantic liquidation, which is what we saw. And as soon as you start seeing these like huge 700, 500, 600, 1,000 ticks coming in, just take your hands off the keyboard, just chill. Like the market's not coming back from that unless you see Apple turn around or something, right? So don't freak out. Just
don't micromanage.
Don't micromanage. And I'm saying that almost to myself because I'm the king of micromanaging stuff.
Me too.
So these are all just confluent, like really important factors that all lined up that gave you confluence to, if you didn't take the trade with JD, it wasn't too late. You could still get in to something that was priced fairly with respect to what was happening. And I also want to say something about, I know we moved past this, but we're talking about people bringing alpha or whatever, right, earlier. And, I think the point is that you're only going to learn about the markets if you're curious, right? Like I gave Aaron like this one chart, right? And he went and in 24 hours went and like made it into this giant trading system, right? Because he saw that there was some potential to it, and he did it all on his own because he was curious and he enjoyed it, and he saw that there was some alpha there to be extracted, right? So there's a lot of stuff that's shared in this chat, and it's not obscure, shit that was in the other room that is erudite or hard to explain. It's very basic and systematic stuff, and you should feel comfortable asking questions if you aren't looking at it. And you should also take time to be curious and look at it and ask yourself the same questions that Aaron was probably asking himself, like, oh, I wonder what this is doing when the SMA is sloping down, or I wonder how I get in, etc. It's you can only, I know there's like a lot of literature that's passed around in this room, and everyone loves to read trading books, but I have never read a trading book in my life. I've listened to one book, which is uh, Market Wizards, right? But personally, for me, I think there's much more value to be extracted by you spending time in front of your screen, looking at systems, asking yourself questions. If you don't understand something, look it up. If you don't understand it still, go ask someone. Um, you know, be curious. You will learn. You will start to see the market. You will start to learn it. Um, like I posted a system the other day, right? And I'm not going to get data for this, right? Because I want someone else to try it. I can certainly help you, but I want someone else to look at it and see if it's a useful system. Practice being curious, almost, if you have the time, of course. But it all just starts with being curious.
I love what you're saying. Totally agree. Totally agree.
100%. I can't tell you.
I mean that was killer. I totally love it. And you know what? That's honestly, with what you just walked through, I think that is how I learned to become a half decent trader, to pay my bills and go on a couple of vacations, the last X years. It's the curiosity and going and looking and asking, fact finding, experimenting, and then putting some capital at risk to figure out if it worked. That was awesome. That was awesome.
Yeah, I mean, it's one thing if you have the time. So here's another thing that's different here, right? I mean, I feel like when you start trading, at least I did this, like you go into rooms and you just expect people to give you trades, right? You just blindly follow them. You don't learn shit, right?
Terrible idea.
Right, terrible, right? And then all of a sudden, like you start learning about options, you're like, oh, gamma, delta, Vanna, cool. Like that stuff's hard to figure out. Like that shit's really hard to figure out, right? And even if you figure it out, there's no telling what data you have and how accurate it is and what
it's calculus slash physics. It's like it's not, addition or subtraction. It is literally advanced math.
Yeah. Focus on the market, what's doing,
Focus on what comes easy.
Yeah.
Find what comes easy to you. And like what you said about like why I looked at this, I looked at it and in 5 minutes I was like, this is easy to me.
Yeah. You saw something there because
but someone else might look at this and be like, this is nonsense. But everyone's going to look at things differently, and you have to find a way to look at the market that makes it easier for you. Because that's at the end of the day what this is about. You don't want this to be a difficult calculus experiment.
No, fuck that. Trust me, you guys. You know how many smart motherfuckers are out there trying to figure this shit out? Like, guys, I would like to believe we're pretty smart, but come on, let's focus on what we can make money off of.
Yeah, like I talk about my buddy Mark Sebastian all the time, right? Like his partner Andrew, all right, is one of the smartest.
Was he on the floor? I'm sorry. Was he on the floor? I recognize that name.
Mark, it was on the American Stock Exchange in New York, and then he was at the SIBO he's still at the SIBO. He still has a seat there.
Okay, all right. But sorry to interrupt.
Sure you are.
So you've seen him on like CNBC or Bloomberg or whatever. And another cool thing with Mark, and this is the power of volatility, is he actually went on Bloomberg in March 2020 and said it's going to be limit down. He was the only person that went on that shit and actually went out and stepped out like that. But anyway, like his bosses when he got to Chicago were the guys that turned the VIX into a tradable product. Oh, okay. Andrew is the one that developed the market maker training program that every single firm now pretty much copied to train their market makers. Okay? The actual math behind everything is not easy. And I'm like, one of the best things on the floor, whether it was on the screen, on a Globex terminal, or if you were in the pit, was you knew who was on the other side of the trade. If I was trading with Gov and I was filling an order, I'd say, Gov, I sold you 500, 350.
That's Goldman Sachs.
Right.
Or hey, sold you 1,000, 660. That's JP Morgan. So you are always reminded who you're up against. And it's no different. So it doesn't tell you that when you're getting short, Goldman's getting long or Icon is getting long. So when you're doing the option stuff, just really realize that, it's pretty advanced math and you're going up against math geniuses. Flat out. Your MIT valedictorians, that kind of shit.
Yeah.
It's pretty advanced stuff.
That's
really why I kind of stay in my futures lane. Because even for me,
Sam,
I don't mess with them.
To piggyback off that, I would say even this. Every single thing I use on my charts, I know how it works. Every single indicator, every single thing I look at, I know what's going on behind it. Right? You have to really understand what it is that you're using. And I'm not asking you to go understand options because that's impossible. But just like that's like the level of curiosity you need to have of like, what am I even looking at to start engaging in positive expectancy systems and learning the market. That's when you start to truly understand the market. Because once you understand what your indicator is really saying about positioning or about momentum or about extremes that happen at standard deviations or outside the Bollinger Bands. So I'll give you an example, right? What is occurring when we have a move outside the Bollinger Bands, right? Something goes way, way up or way, way down, right? That's positioning that gets trapped, right? And so what happens off that positioning? You see a reversal, typically. It might be a shallow one or it might be a large one. But what's really happening underneath the surface is someone's stuck there, right? And they're being forced to get out or reverse. That's a very simple example, but that is what an indicator like a Bollinger Band is saying when a candle pops up above the upper level channel, and then comes back in. So just always try to think of these things in terms of what they're doing and then what positioning is, especially in futures markets. Positioning is the only thing that matters in futures markets because it's 50 times leverage, right? It's not a joke. Like people get blown the fuck up every day. So if you can identify these areas and see where the positioning is or see where it's in pain, even if it's just a short-term trade, by understanding your systems, by understanding what's going on in the market, by looking at it in this context of it's an auction, someone's stuck and they have inventory, how are they going to get out? I'm going to position myself in front of that guy, force him to, I'm going to ride his coattails while he liquidates. Just an example.
So that's a big boy concept, and I love that. I mean, I do. I totally love that. I mean, but so where I struggle with that personally is that when I was on the floor, I was a half decent sized trader, probably the higher 10 percentile, but sufficiently that I could sense the pressure in the market, and I could see orders coming in, and I could tell who needed to get out. I could tell the pressure. With the format that we deal with now, I can't tell those particular things. I don't dial into the real precision, timelines or stochastics or RSI. And it's like, when people do, it's like, if you're able to fine tune it, that is awesome. But I just don't get it. So I revert to the larger time frames and I look for just the rejection of certain levels. And that tells me, bringing back to the auction stuff, that is like the market is simply not ready to auction here.
Yeah.
And so this is a rejection or an acceptance area. And when I see those areas, I'm looking to get long or short. And then only then when it gets close, I shift to a smaller time frame to figure out an area to get long or short. And I hope for the scales. And it's like,
Marley,
it's so hard. It is so hard to figure that out. But I love
Yeah.
I love what you're saying, man. But on the floor it was so much easier. But I can't get my, when we're trading electronically here.
Yeah, no, I mean I agree. You know how I feel about volume profile. I think any important level can be found in volume profile. I mean that's literally all you need for futures trading.
Yeah.
It just works.
So why don't you do this
Okay,
full time?
I'll give you guys an example. If you guys are curious, go look at a 1,000 trades chart. So go look at ES 1,000 tick on your Thinkorswim and put on a 20 period Bollinger Band on that. And you'll see that every single time, or almost every single time, that there's a candle that trades below the lower cloud or above the upper cloud or band. There is a sizable scalp or even a continuation of a pretty big move that can happen. Or even you might even catch the top of the market. And that's some real I didn't want to tell you guys this shit, but I like you guys. I'm telling you. That's something that I've discovered, and that can lead to some very, very good trades and with very, very good risk to reward ratio. And that's just based purely on this concept of positioning being offside.
Please repeat that, because I'm on TradingView. I'm trying to plug it all in and I can't get to it.
20 period Bollinger Band.
Okay. 20 BB. Okay.
And it's plus or minus 2 standard deviations. And I don't think TradingView has 2SD. I don't think TradingView has whatchamacallit, tick data. You need to do this on TOS.
Yeah, it's all right. I've got another system. Okay. 20 Bollinger Bands, plus or minus 2 SD. Okay.
Yep.
And 1,000 tick?
1,000 ticks. I use 1,024. It's just the way I've been taught. So if you want to use 1,024, do it. There shouldn't be too much of a difference.
So who taught you that?
So there's this guy. Okay, so there is this forum called Use ThinkScript, I think, and they have. So when I first started out trading, I was, I might have a scientific background, so I was like, well, I'm gonna try to figure out some secret in the market using these indicators. I'm stupid, right? So I was,
of course you are
naive, and so I spent the first, I don't know, a few months just banging my head against looking at all these different systems, and there's this guy who made this indicator on that website where he had his code hidden, so you couldn't see like what the variables were or whatever. And I saw it worked, and it works on all time frames. I saw it work quite well on higher time frames, and so I went in there and kind of I tried to understand the code and saw that he's using this 20 period Bollinger Band along with some other stuff, but just for this simple example, there were reversals that happened because of it. And so I took it, and once I had learned this 1024 tick chart, I took it and put it on there to see if it would be useful for intraday stuff on sub 1 minute time frame. And lo and behold, it works. It doesn't work every time, but yeah, consistently. But I mean,
you have pretty consistent. You have consistent entries if you're not on a plane.
Yeah. I mean, it's the thing is, so let's think about this, right? You are attempting to play a counter trend move of what is effectively a parabolic. Let's say the market's going up. What is effectively a parabolic move, right? So what you're trying to do is you're looking for that extension above the upper band of the Bollinger Band, right? And you're looking for a snapback into it. So that indicates that the market is finally done going up, or not finally done, but there is a chance that the market's done going up, right?
So we have a reversion to a mean.
Yes, we have a reversion to a mean. And you can use that candle, the body of that candle, to set your entry and set your stop. Because that is you might get the market, you might go in the money a little bit, you might make some money, right? And then it might snap back higher because again, we are counter trend trading, so it's typical. It's just a little bit of a cool off period, then it continues going, especially on smaller time frame like 1024 tick. But you also have to understand that the trade you're putting on has extremely tight risk to reward. So it's, you may lose a few, but when it goes, you need to hold that trade till it starts reversing again the other direction. So that's just the way to play the probabilities on that trade.
That's interesting.
Yeah.
Hey, man, I'm always learning. I mean, I think we all should be,
Hey, Scoop, have you ever looked at that chart with a 21 tick Renko?
The one that is that the one?
Yeah, the same thing with the Bollinger Bands.
See, the Renko is all weird because I haven't, but I don't know how it would work with the Renko because it's all price. And should that matter? I think it kind of matters because you'd only I'm imagining when you have a trend
reversal. So I'm looking at it right now, and it it looks like when it hits the top or the bottom, not breaks it, because it's not going to break it. Here, I'll post it. Then I post it in the live chat. If it hits the top or the bottom, that's the reversal.
Yes, Renko is weird because it only goes up.
It is weird. And compare
so
that.
It's like,
here's the 1024 with the same thing. This is the 1024.
Are you putting in trading? Yeah, Renko's weird, man. 1024 is good. See, look at this. I don't know what time it is, but you see the first.
So the top green line is the top Bollinger Band, and the bottom sort of.
Yeah, so you see this on the left hand side. Yeah, you see this on the left hand side where it transitions from all the way extreme left hand side. It transitions from pink to blue, right? So again, it goes above the green band, and then it closes back below it, right? And you get a nice reversal, right? And then you almost get the same thing happening on the opposite side, right? All the way to the bottom, you get a nice reversal, and then you have another one happening, kind of 1/3 of the way through your chart, where the pink candles are hitting the blue line and the green upper band. You get a reversal there. So I mean, guys, I'm just saying, again, this is just a really good example, right? But this is not going to happen every time. But it's something to keep an eye on. And I really wasn't trying to explain this like this is a system you should trade. I just meant if you take this example and you ask yourself, this is just a question of being curious and how to think about things, right? If you look at this and you're like, what the hell is going on here? Why does this actually work? It's about positioning. Right? There's positioning that's becoming offside, and that leads to people being forced to sell or forced to buy, and that leads to moves to the other side. That was the point of this example. And I said I got into this whole how does it work? Does it actually work kind of thing? So take a look at it yourself. Let me know what you think. I can certainly share more. I can share this indicator with you guys, but this is just to get you guys excited about. There's things out there.
So you're trying to get the guys that trade full-time excited and you don't? What the fuck is going on here?
What do you mean?
You should be trading full-time. What the hell is going on here?
I wish, dude. I wish. I like my job. I like my job.
What do you do?
So if we break this 4085 right now on ES, I think we could flush a little bit.
Gov, I am a process integration engineer.
It's been pretty good.
I'm sorry, what was that?
I make microchips. I'm an engineer at Micron.
Oh, very cool.
Yeah.
You actually make them?
No.
Or do you sit on Teams meetings and talk about it?
Yeah, that's why I talk to you assholes all day.
Hey, I used to be an aerospace engineer, sail on the flight side, military side, and then got out and was selling airframe products
That's
to
sweet.
a lot of people. So I totally get it. All good.
I want it to be in aerospace actually, but I don't know what happened. PhD got in the way.
You know what? Crazy shit happens, man. I wanted to fly since I was like 13 years old. I got like 3 or 4 photos for me, all along the lines of showing up at the Air Force Academy. I went there and flew for a bit. And next thing you know, they're telling me there's like, we're running into a problem with your vision. You're going to have to like go do a couple more exams. Found myself flying a desk at MIT Labs 15 months later.
Nice.
So
Awesome.
believe me, yeah, that might sound good to people, but when your dream is that, not. Anyway, whatever. Sidebar. Who gives you shit? I'm moving on.
Yeah, Aaron, you wanted to see that Jimmy's intraday future system, right?
Yeah, I have it pulled up here.
Yeah. Could you present your screen? Let's talk about it.
Yeah.
AD, you here? You said you were watching it today at all?
I am here.
How was it?
See.
It was interesting. Like I didn't play a trade off of it, but
Yeah, don't yet. I mean, just like chill and watch it. Yeah, definitely.
Just watching it, I found that Twitter account that you referred to. So I was trying to figure out.
You guys need to follow this kid. He is like straight up. He's a very, very smart guy, and he creates really good systems that are worth at least checking out. You will at least learn something if you don't use them. So sorry, AD, go ahead. You were saying.
No, that's okay. I mean, what I found was just going back in time. There's these arrows that pop up that just somehow always resolve in the opposite direction. You know, whether it's a day or it's a week, but somehow it always does. Now, what was a little confusing was towards the end of the day, as that price was dropping, those arrows started popping up. So I posted one. And then action was so fast, and then another like 5 arrows popped up. So
you're talking about here where I'm highlighting here, right?
Let me switch to the screen. Yep, that's it right there.
So okay. So let's look at this. Here's how I would look at this. If I was looking at something completely new, I'd be like, "What the fuck is this? What are these arrows?" Right? Click the gear icon and go to the settings, and let's see what it says. First of all, I sent a description about this. And
where the fuck's the gear icon?
It should be top left next to meridian points.
Yeah, real quick while you're setting that up.
It's view only. I don't know why it won't let me go to settings.
I can present it.
You know, when you look at a chart like this, it doesn't have to be for entry and exits. You don't have to use the same chart to enter a trade that you use to exit a trade. You know, so look at it in both, from both sides, not as just one thing. Because a lot of times it can give you some false signals otherwise.
All right, Aaron, I'll just present it. And
I mean, it went from February 15th to a full day without anything.
Allow me to share my screen, and I will explain.
I don't know how to stop.
So BT, you here, bro? BT's like DMing me, asking me about this, so it's like I may as well teach everyone.
Yeah, this is the Shanghai Jimmy one, right?
Wait, hold on.
Shanghai Jimmy. I feel like that's like a
Shanghai Jimmy,
dealer.
baby. That's right.
Was that your
Shanghai
cocaine dealer back in the day, VT? Shanghai Jimmy?
Yeah, I've been trying to figure out this friggin' chart, man, but it's like all protected and shit.
Can you guys see this? Okay. That's my name. Boom. Can you guys see this? Okay. The screen?
Yep.
Yeah.
Okay, awesome. Okay, so a couple things you notice right away, like Aaron was saying, there's no signals here, right? There's going to be no signals when it's trading Globex. So it's only gonna show signals when it's looking at our trade. And the reason why it does this is because this system is looking at advanced decline ratios in the NYSE and NASDAQ, right? It's looking at TRIN, which is like the advanced declining ratios volume weighted, right? And then I don't know what these NQ1, 2, 3, and 4s are. I think there are other market internals that he's monitoring on the NASDAQ. I asked him and he wouldn't tell me. But effectively, the system is looking at the market internals and it's comparing divergences or confluence factors with price that's happening on ES futures. Okay, so this is the same chart that Aaron was showing. And AD, you'll notice that I don't have as many arrows as you do, right? That's because I went in to the settings and I turned off the overbought and oversold. Right? I don't give a shit if it's overbought or oversold. Things can get more overbought, oversold at any time. I don't want to see this. What I want to see is an uptick or a shape, which are market internal features. I don't know why he called this shape. I asked him that again. He's wanted to tell me. So no idea what it's called shape, but uptick or downtick is referring to a divergence between futures price and what's happening underneath the hood. Right? So let's say that, let's see, where is it in purple? So there's a purple right here. This is the purple. So now ES is going down, but people are actually buying stocks underneath the hood. You expect the index to show a little bounce, right? So that's why this is here. These other arrows, these red and green ones here are, I'm pretty sure they're Bollinger Band extensions. So these he calls standard deviation overbought, standard deviation oversold. And this is the same concept that I was explaining to you guys just a few minutes ago. And this I leave on because I know that this has the prospect of working. Right? So those are the signals. Turn off these overbought, oversold, leave the rest on, see how it works. Don't use this when we have a gamma bomb happening via Powell or some news events. I'll show you an example where it doesn't work at all because Powell's speaking and the options market's going crazy. This was, I think, this was CPI. Yeah, this is CPI 214. Yeah. Yeah, this is CPI. Pretty good trades here.
Frozen.
Oh, fuck.
I can still see it.
Oh, well, let me check my
quality. I can see it, but I can't see. Oh, now it's moving.
Can you? Okay, let me.
Now it just moved again.
180p.
Maybe it's me.
Source. Let's just
but I have a ton of Micron RAM.
Okay, is it better?
Maybe.
Perfect on my side.
Yeah,
it's fine on mine.
Seem Dan need improved internet. Seem Dan need move to out of farm.
See Dan's neighbor screw with Dan's internet.
Oh, he's about to get a real porking. That's a story for another day.
Okay, so we worked on this day because CPI happened pre-market, right? And then you can monitor stuff, and maybe a lot of these option positions may have settled or something. But I'm highlighting this because it worked here, but I'm going to show you FOMC, and it does not work. And then also there was this day where Powell spoke in the middle of the day at some conference at like 11, and like market went up and down like 50 handles like crazy, and it didn't really work that well. And I'm highlighting to you the pitfalls because obviously the signal's working. You know, it makes sense. You're like, oh, sweet, it works. I'm going to take it, but I just wanted to see where it doesn't. Also, I've noticed that he has these Fibonacci sequenced VWAPs. When you see a signal in these regions, when it's not a trending market, it's a very, very good trade. Very, very good trade. So like here, for example, we have a balanced day, basically, right? Like market's not really trending, it's ranging, even though it doesn't make lower lows, but it's still kind of ranging and compressing, and this is a pretty decent trade. 3-point stop. Maybe. Yeah, here's a trend day where it doesn't really work. Right? I mean, I guess signals at the open are just sweet. So then and it doesn't really go above that. You could take this trade. this could be your take profit or scale if you were looking for an exit signal using this strategy, or alternatively use the bands at some point to take your scale. Or if you're going to be big balls, just hold the trade. Who cares? And the purple only flashes here at the end of the day, so that's pretty good. I guess it actually looked kind of decent there. This is good too. Come on, there's one that doesn't work. It's like, okay, here we go. I believe this is Powell's conference day, where he's like, I don't know, for some reason there was all this crazy like options activity, which is my theory for why the market moved like this. But you have a lot of missed signals here that don't work, and one that eventually does. But this is just an example of if there's some news or there's a lot of hedging around some event. Don't play the momentum. Don't play the counter trend. This is what I'd say, because these like indicators are getting run over purely based on momentum or whatever other flows are dominant during these times. That's pretty good. Another thing I've noticed, and okay, well, we'll talk about this next time. I just want you guys to focus on these triangles for now. But there is information to be gleaned off of these NQ1, 2s, and 3s, and 4s, which Jimmy describes in the tweets that I pinned next to this link. But for now, let's just focus on it. If you guys think it's worthwhile to discuss this further, we can certainly go to the other aspects of this. But so, wow, this is pretty good. I'm surprised. So it works. Kind of works. Continue watching it. Be curious. See if it's suitable for you.
Yeah, it's pretty interesting, and he does. I went through some of his tweets, so he does look at NQ1, NQ2, where it is in terms of is it on an extreme going towards the middle, or is it sloping up?
Yeah,
so that puts a lot of power into it, and I guess the way that this is set up, you can only use it on futures, like the way that the uptick system is set up. Right. Okay.
Yeah. It's so, the futures market, like when you're trading the index, it's so information rich. There's so much information out there that you can use to your advantage. I'll post the Twitter handle is right here at the top. I'll type it. James T. There's so much information out there when you're trading the index. You have the index made of a bunch of stocks. Right? Watch the stocks. You can market the internals of the market. You can look at the options flow. You can look at volatility. So when you're trading futures, try to not just look at price, right? I mean, of course, price is the most important thing, but try to utilize the things that comprise the index, like the individual stocks. If we talked about Apple or Tesla earlier, to your advantage. And this is what the system is attempting to describe an environment where you can take advantage of market internals dislocating from actual price action and then have a mean reversion trade. Okay, VT, does that make sense?
Made a little sense. I gotta try to figure out how to freaking get it off of Jimmy.
How to get it off what?
How to get it from Jimmy.
Well, next time you go and buy an 8-ball, just ask
you don't have
him.
to. No, you don't have to buy anything. It's free. He shared it for free. I showed the link. It's pinned in the trading floor.
I can go to the link, but I'm not. I mean, I can. No, I can't.
You have to press. So, do you guys have TradingView accounts? I can show you how to do this. Okay, let me do it.
Real question is, why don't you have live data?
I think I had live data for TradingView a while ago when I was going to start doing futures trading on it, and I was like, nah, this is kind of lame because you don't have tick data, so I didn't buy it. And now I'm not doing it so that you guys are forced to go do this yourself, and then you tell me what the trades are, and that way you learn, and that way I don't have to watch this shit. But if you don't do it, I'll probably buy it.
I only take Neil and Gov trades because they're alpha kings.
Gov's an alpha.
Okay. Yeah, Gov should be alpha king today. Who is alpha king today? Oh, JD's alpha king today.
I think JD is alpha king.
What is the alpha king equation?
I don't know. I think it's just
because I think it's bogus. Random.
You know what?
Has Aaron ever been alpha king? Come to think of
it. I've never been alpha king.
Yeah, Aaron and Gov haven't. But I mean,
Aaron is just is alpha leech. He just takes alpha and makes it his own.
You know, it's not as if it's, you know,
alpha leech.
You know, it hasn't been that long, you know, so I wouldn't worry about it too much.
There needs to be we need Rock to build an alpha bot.
Have plenty of time at the top of the mountain.
Rock needs to build an alpha bot that live calculates alpha given.
How do you think you figure it out? It is not arbitrary at all.
Yeah, right.
Yo, BT, is there no like copy button here on the top right? Like, is there not like a make a copy? Like when you click something here?
I don't think so.
Shit. Can you send me a screenshot of your screen?
Well, see, I use the TradingView app on my system. I usually don't use it on a browser.
I have never used the app. I'm not sure how that works.
Yeah, I use the app too, and mine's showing as view only.
But can you copy it?
Or just open a browser screen.
Yeah,
I did open a browser screen. Oh, let me try copy.
Oh my fucking!
Copy.
There you go. Aaron, please teach the room. Thank you.
No, I don't know what I'm doing. Copy.
I'm actually like very surprised that this works as well as it does. Or I guess maybe it's just a sample size, but
I've got it now. I don't know why Jimmy didn't tell me that when he helped me build the calculator for Alpha Leader.
the alpha calculator.
So guys, that's what I mean. We're giving you systems. Go figure them out. Go be curious. Use them.
Oh, I got it to work now.
So I don't have to do it.
Yeah, I got it to work now too. I mean,
awesome.
Look, TradingView is awesome, but there's so many fucking buttons in the thing and so many places to go that a lot of it's obvious, but it's like you just don't know until somebody shows you the simple, stupid shit.
Yeah, you're right. And I mean, I used TrendSpider before, which I mean, it's okay for equities and stuff, but it's literally, I don't know if TrendSpider's built off TradingView or TradingView's built off TrendSpider, but they're the same thing, except for one is significantly better than the other.
Yeah.
Which one is built off which one?
I have no idea.
I like TradingView better because I don't have to look.
Oh, it's way better.
Tweets.
Well, TrendSpider Jake's the worst trader ever, but.
You guys have any questions on this before I start presenting?
No, I have to be bi-curious about it first.
Good. Just watch it. I mean, I think it's just one of those things where you know, like AD was saying, you watch it, you don't trade off of it, and you'll start to spot things.
Or paper trade it. That's really the best way to do it, is get a SIP account and, you know, see where you'd enter, you know, come up with criteria. You know, are you just going to like enter at the button? Okay, where are you going to put your stop? Because that's really the whole thing. If you have stop management and you model that system around risk, I think that's where it's going to be a real winner.
Well, and Neil, you brought up a really, really good point, and that I'm going to add to. Where do you put your stop is like the number one question. Like, whenever I get messages on either the unnamed room or this room or any other room that I've been in about futures trading, the number one question is, how do you decide to where to put your stop or do you just do the same amount of ticks every time, or how do you calculate your stop? And for a long time, the answer to me was either like 4, 5, 6 points. I have completely removed that from my trading, and my stop is where my trade won't work anymore. Always.
Yeah, that's good.
And it sort of forces me to only take a trade that I can define where the trade doesn't work anymore.
Yeah, that's a great point, and that's why you were able to stay in that trade all day.
Yeah.
Is because you weren't proven wrong. Because how many times do you go and you're like, oh, I'm going to just get out and just take this little bit, or just say this is
I
taking.
thought about getting out of this trade like 20 times today and forced myself to be like, nope, I'm just going to put my stop at like 46.50 and walk away.
And that's the benefit of being systematic, right?
Yep. 100%. Absolutely. Well, I'm calling it an evening, gentlemen. I am exhausted.
I agree. All right.
Yeah.
Ladies and
See
gentlemen.
you guys tomorrow.
Guys.
Have a good one. Great session.
Guys, thank you very much.
See you guys.